Good morning and welcome back to The Compass. We're recording this episode on Wednesday, July 2nd, effectively a week that is the sort of unofficial start of summer, or maybe unofficial start of summer from a mining investor's, or official start of summer from a mining investor's perspective. As we know, the summer can be a slower time. With me, as always, is Sam Pelaez, President, CEO, and CIO of Olive Resource Capital. And my name is Jared Macpherson. I'm the Executive Chair. Summer, Sam, you're sitting in Europe this week, so I guess it's pretty much everything's closed and that's it for the year, or what?
Well, we've had a pretty serious heat wave all over Europe. I'm happy to report that the bicycle parking lot outside of the office is completely full still, to my surprise. But yeah, I think for capital markets globally, the sort of 4th of July, and our Canadian colleagues, co-nationals will understand it's more important than the July 1st holiday in Canada. But it sort of marks the beginning of summer. For people who are traveling away from the office, it's a time where the kids are not in school or university, and people tend to take time off. In Canada, go to the cottages, some people traveling to Europe or other parts of the world. And that all translates in people being away from the office. But at the risk of jumping ahead to your conclusion, that doesn't mean the world stops and the news flow stops.
Well, I think that's an interesting point. And so, in preparation for thinking about this episode, I was like, well, let's have a look. Like, what happened sort of roughly July 1st to August 30th, August 31st over the last, 4 or 5 years? What kind of moves? And actually, what I was surprised to see is that the moves are meaningful. So I looked at two sort of indices. I looked at the GDXJ and I looked at the TSX Materials Index, the J15, which is something that we compare ourselves to. So if you look at the GDXJ, 2021 down over 8%, 2022 down over 5%, almost 6%, 2023 down 0.7. And for the record, this is a 2-month return, right? Not annualized. And so those are pretty big numbers, 5, 6. And then 2024, and I think we were all around for that. We saw this stealth rally in gold in 2024. And so that was that year was plus 7%. And I can mention the TSX Materials just because I wanted to check a second index, but they're actually somewhat uncorrelated. 2021 down 4.7%. 2022 was actually up 6% on the TSX Materials Index. And then 2023 and 2024 were both down almost 7%. So, in context, you think of the course of 2 months, those are pretty significant moves. They actually can have, if you're thinking about it from a portfolio or an investment return performance over the course of the year, those are pretty significant moves.
We talked about this before recording it, but you hadn't told me the exact quantum of numbers, and I'm actually surprised that there are that big.
I was too. I was thinking, typical. If you think about 8 to 10% returns over the course of a year, you're looking at kind of up or down in a sector. You're looking at maybe over the course of 2 months, tops you'd have a 2% move, right? That would be a big kind of a large swing. And so you're actually seeing. I don't know. I didn't go back. I didn't run the numbers back to May, but maybe sell in May and go away is holding true. Now there are some bad years for resources in there, right? Like let's not kid ourselves. 2022 was a bit of an outlier to me, being up 6, because that's a year we lost a lot of money because of how the copper market went at that time. We were really weighted towards Rockcliffe, but it was, those are big moves.
Yeah, I think, if you look at the seasonality of resource investing, for metals and mining, the best part of the year is sort of the December, Q1, Q2. So we're towards the tail end of that. For energy, typically it is Q2 because US consumption of energy-related products peaks around the 4th of July weekend. And the second half of the year tends to be softer. We write about that in our press releases. We always make a reference as to where we think we are seasonally. Now, caveat being, the reason we don't sell in May and go away and we're here recording this video and watching the news is that, as your numbers rightly pointed out, the norms don't conform year after year, right? You have outlier years, you have periods that actually reverse the traditional seasonality. This is just general guidelines as to how things perform over the long term, but by no means you can rely on them as an investment
Well,
strategy.
absolutely. The one thing we'll know for sure, we're gonna definitely gonna get lower volume. But I can remember years, and this would have been it's either 2018 or 2019. I can't remember the summer off the top, the exact year off the top of my head, but it was the last sort of silver run. This is back when I was on the sell side, and we were at Red Cloud. We were putting up a silver deal every week almost, right? And filling them easily. It wasn't like there were any that were a struggle. Hindsight being 2020, maybe some names that we some names, some questionable names, but the I think that so you could have you could have big moves in the summer, you could have big moves in a subset in the summer, depending on what's going on. The other thing you got to watch is that you have a bunch of seasonal explorers that are out in the field now, right? So probably if you're a summer only explorer, especially like sort of the BC or the Yukon type, Yukon's not necessarily summer only, but these summer only groups, they're all getting started. We're getting some of those press releases. I was looking at press drill results press releases today, and one of them was a summer explorer, but it wasn't actually drill results. It was VG in the core, right? And so you kind of look at that and go, okay, yeah, there's so the people are out there doing work, and so there's excitement building, and so markets you can get names moving up, and there is I think we've talked this before. There's actually a seasonal trade where a lot of those seasonal explorers, those summer seasonal explorers, are actually moving up this time of year. Because there's anticipation of that news that's coming in September before they hit the financing window again in Q4 and Q1, right?
And, at the risk of being flippant in a way, if you ask me empirically how I think about seasonality and how this sector trades, typically the summer offers pretty interesting buying opportunities because generally there's less attention, there's less liquidity, things tend to drip down to lower levels where you can pick them up at attractive prices. Then comes the September sort of like refocusing of the conference season, everybody back at their desks, everybody preparing sort of for what year end's going to look like. And that typically results in a rally that, as you know, having been on the sell side, typically culminates with a ton of capital raised in early Q4 all the way for flow-through issuers all the way to the end of the year. So it's important, I think, from that perspective to be around in the summer and paying attention because you may have access to certain opportunities because of the lack of liquidity that allow you to purchase things at a lower price than you would otherwise do in September.
Absolutely, I think that's a good that's a really really important point. There's lower volumes, right? So there's less. Back to that point of there's less people at their desks, right? So, the what you get in July, between now and end of July, first week of August, you actually do get Q2 reporting. So there will be some, people are at their desks a little bit, and then you get into late August and no one's around. But that lack of volume, what happens is that because you have fewer people at their desks and there's just a little bit there's less volume there, you might have a story that you really like, but one seller decides that, they need to put gas in their boat for a trip around the lake or something, and they sell the stock, and all of a sudden you've got an opportunity to pick it up, and it might not stay down there very long, but if you're paying attention to those little moves on individual names, you can create an opportunity to buy it. I remember one of the first new positions that we built in Olive was Great Bear Royalties, and that was a stock that was very illiquid, and we did, that was just for us to build that position. We built it very patiently over the summer to get there.
I think I remember that now. It took many trades,
Yeah.
many small trades.
But I think that's a really important point, is that you can get price dislocations. You can get price dislocations in two ways. You can get price dislocations the other way, right? This is typically one of the slowest news weeks of the year, right? When you have big for mining companies, you have July 1st, Canada Day. So the Canadian guys are away. And then July 4th tends to be a slow day because the Americans are away from their desks, where most of the volume comes from, where a big chunk of the volume comes from. So all of a sudden you do it. And it's the start of summer in Europe. As you noted, the bicycle parking lot is full at where you are. But I'll tell you that that doesn't mean that, Europeans have a lot more holidays than us do. Us in North America have. And so the consequence is they're away. And that's not a bad thing. But that means that sometimes good news can fall on deaf ears, right? So like this morning, I just for curiosity, I said, "Oh, how many drill results press releases out there?" I mean, there's maybe a third the volume or less of press releases out there, right? Like, let's be clear. But there were 6 drill results press releases, 6.5 if you count that visible gold one. One of the companies was NGX. It's not like there's guys sneaking out drill results. So I thought that was really interesting. There's one RTO merger announced this morning, small deal, but still stuff's going on. So, I think that's, there is stuff going on, but what can happen is you can get these, if we've seen this in the past too, where you get these really, really good drill results over the summer, no one's paying attention. And so then consequently the stocks don't have big moves. And I think that creates, again, because there's lack of liquidity and lower volume, if you're paying attention, you can really take advantage of those situations. The other thing you need to think about in the summer, and I think this is a big one, is bad news. Because fewer people are at their desks and fewer people are paying attention, it's a great opportunity for companies to slide out bad news. I'm looking, typically, I didn't really see anything from the 30th, but maybe there was something out there. 30th, that Monday between Canada Day and the weekend, that would have been a good day to sneak something out. The other day to watch will be this Friday, July 4th. And then the last week of August. The last week of August is really popular. We got hit with some bad news there on Midnight Sun last year, a name that we'd held for a while at that point.
We did get the resource estimate from Arizona Mining.
Yes, not on Monday though.
Which doesn't exactly fall on the date with the least number of eyeballs.
It's a low,
but still a summer release.
Yeah. And so, to be fair though, that estimate came in about half of all the analyst estimates, right? So I don't know if it's probably good news because that company needed a resource to move ahead, and it's very economic, but it needed the reset. So that's something else to be watchful for. The other thing is that sometimes during the summer you get companies that have a bit of a reset, whether it's a management change or a change of focus, or they pick up a project or something like that. And so those are things to pay attention to as well, because sometimes those are really good signs, especially in small cap, where companies are trying to reposition themselves. That can be a big catalyst as well in sort of in the micro cap range.
And I think just to look to wrap this one up as a shorter episode, let's talk about what we do over the summer. So the summer, other than joyful entertainment with your family and friends, it also gives you the opportunity, because of the lesser news flow, gives you the opportunity to do more sort of your own organic type research, identify opportunities, perhaps look at that one company that everybody's talked about, but you've never actually sat down to do the research and complete the puzzle on your own terms, and download the presentation, financials, sit for an hour, completely dedicated to reading the documents without the phone ringing, etc. Those are the kinds of things that we do over the summer as well, and it's a good complement to the externally generated influence that you typically get from the sell side banks, the brokers, the call it the investment community as a whole that directs opportunities your way. This is a good window to do the opposite and just try to find some internally generated opportunities and complete the puzzle in a few ways, like I said.
Yeah, I think that's a great point, right? It certainly is, because there is less news flow. It's a good, you want to be well positioned, right? You come out of the summer, you want to be well positioned from a knowledge based perspective, right? And it gives you time to do that. Generally, most management teams are working over the summer. So if you reach out to them, they generally pick up the phone. It's a little bit easier to get a meeting or call scheduled if you have some questions. And so, I think that creates that opportunity to rebuild your knowledge base on names, right? There's certainly names. I've got a list, 3 or 4 that I need to spend a bunch of time on to figure out our view and refresh myself on the stories or learn the stories. And I think that, you probably have the same, Sam, and it's, we'll spend time. I mean, we'll also spend time reevaluating our portfolio, what's in there, what's not. Not a great time to sell if you're trying to exit a position of any kind of size this summer. That's a tougher thing. But maybe there's something out there that you want to buy, and it makes sense to swing, to shift. I think you need to be a patient trader in the summer as well. It's very easy to chase because of that lack of visibility. Stocks can get a little bit gappy, especially in the microcap space. Want to make sure that you're not chasing things. The other thing to keep in mind is overall things move slower. Tend to get less M&A in the summer. Having been in the process of executing a merger last summer, lawyers go on vacation, right? Like it's not. I know we don't think that they're human and we pay them a lot of money, but they actually do go away. Lawyers go away, consultants go away, people you need to finish things. And so, what ends up happening is you end up with a bit of a backlog come early September. And so there is a natural reason there's a lot of news flow there beginning of September. And the summer's good. This week should be slow, although we did see a little bit of news this morning. Main part of July, people are around because of earnings season. And then, late August, pretty much after the civic holiday year in August, it gets really, really quiet. And then you have to be really patient as an investor, as a trader, and then also as an investor. So that quiet time creates an opportunity. But don't, as much as it's important to get away from your screens and get away from screens and relax, and get away from the news flow and the daily grind and do some research, you still got to pay attention because things do happen in the summer. As we talked about at the beginning, stocks move and markets move and significantly. And so it's definitely we'll be definitely paying attention this summer. So.